I would like you to talk on your capacity as Managing Director of Baring Asset Management Asia. And can you give us a specific view on which type of market will perform better in the second half, do you think?
I think that the marketplaces have been, in general, the stock markets have been very volatile. I think a lot of the concerns have been over the direction of the oil prices, the raising of the food prices, and the policy that the central banks and other such monetary authorities will take over the next few months. But overall, if you believe that there is going to be a slight moderation of oil and food prices, and that yes, there may be a slight increase in interest rates, but over the medium term, in the overall context of the long-term history, that shouldn't be so significant. We still think that equity markets will do well. And in general, we do believe that the Asian story is still a stronger one for the medium term. Obviously, short term, there will be volatility.
Mm-hmm. Well, back to the particular market, I would like to focus in China because definitely investors' interests are there. But unfortunately, we have a certain event happening in China, like the snowstorm in February, and then in May we have the Sichuan earthquake. How did these disasters affect the markets there?
I think whilst these natural disasters, catastrophes are always very bad in terms of loss of life, the impact, the comparative impact on the stock markets have been more limited because production facilities, the factories were not directly affected so much by these disasters. Conversely, opportunities arise in the companies that will be involved in infrastructure products, more building, rebuilding, and the opportunity for sort of development of the various regions have been affected. And then if you look at the other side, the insurance companies and companies that are more located in the Sichuan province would be the ones that will have more of a negative outlook given the greater outlay and the more expenses that they would need to incur to rebuild.
How about the Olympic Games to be held in Beijing next month? Will that have any economic impact to China?
Certainly, the intention when the Olympic Games were trumpeted as being, an opportunity to increase the profile of China, to provide a boost to the sentiment of the country overall and to the marketplace in general. That was the original intention. That's been affected a little bit by the external events, the fact that the stock markets generally have been quite poor across the globe. Having said that, I think in the medium to longer term, it will provide a boost to the building of infrastructure and other such related facilities in China. And we still continue to expect that China as a medium to longer term story is a good story for growth and prospects for the stock market.
Overall, as a fund manager, do you think the second half is a difficult time for you?
I would say that for any fund manager, the second half, based on the current volatility in the markets, will be challenging. But I think a lot of fund managers will look at this as an opportunity to make sure that they put the stock picking skills to the best use. We tend to look for companies that are undervalued, have catalysts for growth, will offer the best growth prospects in the medium to longer term. So in answer to your question, yes, it will be challenging, but I think it will be also opportunities to pick out the stronger fund managers from the weaker ones.
Thank you very much for joining our program today.
You're very welcome. Thank you.
Thank you.